one of the things I'm pretty convinced of, based on our analysis, is that inflation is underreported in China.
Underreported.
By as much as 4 or 5% a year. That's one of the reasons why everybody looks at 6% growth as a hard landing. Now, in any other economy, 6% growth would be hypergrowth.
Right.
In China, it's considered a hard landing. And one of the reasons I think it's a hard landing is that, in effect, real growth is being overstated by 4 or 5%.
So the People's Bank of China has taken pretty dramatic action. Since the beginning of 2011, they've raised bank reserve requirements 8 times. So they're trying to get ahead of this, be proactive.
Yep.
Do you believe that they have a handle on the situation enough to curb inflation, or do you believe that inflation is misreported and they don't have a handle on it?
I have a lot of skepticism that any set of policy elites can completely fine-tune and control a dynamic economy like China's. Certainly, we can't do it in the United States. They appear not to be able to do it in Europe. I have no more confidence in China in their ability to do it than anywhere else, where there are elites basically running the central banks and economic planning.
Let's talk about the potential of a China crash for the global economy. How severe would you rank that? Is it akin to Europe falling off a cliff? Is it akin to the United States in 2008? Where would you place it? How concerned should we be, or are we nowhere near that?
It's going to be more localized if it happens, Bobby. I mean, and keep in mind, what China means is more for global growth, in that it's roughly 10% of the world economy, and if it's growing 10% a year and it grows at 0, world growth loses a full point. That's a lot. If world growth is going to be 2 or 3%, losing half of that because China begins to go down is a big deal. And the multiplier effect in a lot of other areas is going to be big. There's still no evidence we're at that point yet. But we are seeing rapid fall-offs demand in things like construction equipment, railway construction over there, housing sales. So lots of things are slowing down pretty quickly over there. It remains to be seen whether that's going to go into a full-fledged recession. I do think that the property sector, which is where we're focused on, is going to enter, or has entered, a recession.
When you look at major U.S.-based corporations, look at a GM, a GE, a Caterpillar, they're truly global companies, but do you think that they're getting in too deep in their investments with China? I mean, if you look at GM's results, a lot of it has to do with how well they're doing in China.
Well, again, everybody's selling into China, but you wonder, with the exception maybe of a company like Yum Brands, which is literally on the ground everywhere there, you wonder how much money they're really making. And I think that's the issue. I mean, I think the luxury brand companies are making money. I think some of the restaurant companies are making money.
We know GM's making money there. We know a Caterpillar in terms
Caterpillar has indicated some disappointment in China. In fact, recently they talked about, on a recent conference call, about setting up a factory in China to export out of China.
Right.
So,
right, they are doing that.
Yeah, so I'm saying that I think that they're suddenly a little more disappointed with their heavy equipment sales in China.
Is this a tune that you're hearing sort of across corporate America?
It depends. I mean, it also depends on the nature of the joint ventures. I actually remember questioning one aerospace executive a couple of years ago, and I said, how could you possibly put technology into a joint venture in China? Aren't you worried about intellectual property rights? And he said, we have absolutely sent them the best of our 1989 technology.